Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, January 26, 2022. Starting with markets, we have stocks up this morning, commodities up as well, crypto up, dollar flat, global bond yields up. Big movers, we have Germany's DAX, our NASDAQ 100 index, and the Russell 2000 index up around 2% apiece. Bitcoin up 4%, Ethereum up 5%, nat gas up 6%. So a lot of green on the screens this morning ahead of the Fed meeting. I tweeted out this morning the top three things to watch in and around the FOC. Number one, how do risk assets finish into the close post Jay Powell's press conference? I think that'll be a leading indicator for how asset markets are likely to trade over the next couple of months. Number two, any instructions on the pace and timing of the onset of QT, quantitative tightening. And then lastly, if Jay Powell or if the statement lends any credence to the possibility of 50 basis point rate hikes and or hiking at every meeting. I think those are both low probability events, but we shall see. On the economic front this morning, yesterday's January Conference Board consumer confidence data shed light on why retail investors, which have contributed to outsized demand for risk assets since the onset of the pandemic, have been reluctant to buy the dip of late. So from headline perspective, the January Consumer Confidence Conference Board Consumer Confidence came in at 113.8. That's the lowest print we've seen since November. Expectations slowed to 90.8 as well, slowest print we've seen since November as well. On a 6-month forward basis, the income differential, higher minus lower, that ticked down to 4.3 in January. So the number of people who expect their income to be higher 6 months from now, less the index for the number of people who expect their income to be the lower 6 months from now. That number ticked up down to a plus 4.3. That's the lowest print we've seen since February 21. Taking it to the chart here, this exact blue time series here is exactly that income differential time series. And what we've seen since this data set has been sort of introduced back in mid 2006, it's more or less tracked the stock market like a glove. But as you can see, since the onset of the pandemic, you had to sort of use record fiscal monetary stimulus to create this divergence between consumer income expectations and the price of risk assets. So if consumer income expectations, and obviously a lot of this has a function to do with how high inflation is, because consumers think about their income on a real basis, not on a nominal basis, that inflation is becoming an issue in terms of supporting risk assets, and obviously in terms of removing the punch bowl as it relates to Fed liquidity provision. So keep your eyes on your fries with respect to this one. This is an important indicator to continue to watch as we progress throughout the year. And then lastly, the 12-month forward stock price index within that subcomponent ticked down to 34.6 in January. That's the lowest print we've seen since February 21. So retail investors are getting gun shy here. Maybe they get less gun shy if the stock market recovers to 4,800 or 4,900 or 5,000 on the S&P. They tend to be a little bit more pro-cyclical. So we'll see with that. So with respect to the probable range setups, nothing overbought in our global macro risk matrix. Oversold signal in the British pound still. S&P 500 ticked down to bearish VAMs there. So be aware of that. That opens up the downside. That creates a fat left tail with respect to our probable range distribution. So a little bit more of a fair fight, minus 3.4% downside versus 5.6% of upside. WTI bullish VAMs, 6 total fair fight as well, 6% downside versus 6% upside. Bloomberg dollar index still neutral VAMs, less than a fair fight, minus 1.2% of downside versus 0.5% of upside. 10-year treasury yield, bullish VAM still minus 8 basis points of downside versus 18 basis points of upside. Bitcoin still bearish VAMs, somewhat of a fair fight, minus 12% of downside versus 11% of upside. Ethereum bearish VAM still the minus 10% of downside versus 24% of upside. And then lastly, gold still neutral VAMs, minus 2.8% of downside versus only 0.7% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, January 26, 2022. Best of luck out there today.